Hey guys, what's up? In today's video, we are learning some accounting terms. It's very important for you to learn these terms because these will be used in every problem, in every topic of accounting. You can take any book, any question, anything, and you are likely to encounter one of these terms on those topics or questions. Hence, it is very important for you to learn these properly. There are some notes available in the description box. Go get it, and they have some exercises as well which will help you in learning these terms properly. So, assets. An asset is something containing economic value and it provides future benefit to the business, which means that this something can be used for some benefit in future, which is usually money. You can either sell it, you can either get some money from it, and so and so. There are some subcategories that we are going to look which comes under asset accounts. Alright, first one is cash. Money and anything that is accepted at face value by a bank is your cash. What is face value? Basically, if you give something, you get the amount that is written on it, such as a check. If there is written $10,000 on a check, you won't get $9,000 or $11,000. You are only going to get $10,000. This is face value. Just like that, there could be some drafts, certificates, and all those things are included in cash. Next is notes receivable. Notes receivable basically are a promissory note. What does that mean? That means it's a written note which states the amount of money which will be paid at a certain date. You can pay before it, but you cannot pay after it. And that fixed amount is to be paid. You usually get it when you sell goods or services. So a business can sell its goods or services in exchange for a promissory note. Now, how are you going to record this promissory note? It's a promise. Other person is going to pay it. This is more secure than accounts receivable. But how are you going to write it in your accounting books? You will write it with notes receivable. Alright, that's your account. Next is accounts receivable. A business can sell its goods or services in exchange for an oral promise to pay later. Someone came to you and said, "Hey, I want to buy this." You were like, "Okay, this is $5. And that person went, "Hey, you already know me. What if I take this thing with me and I will pay you after 2 days?" And you are like, "Yeah, alright, I do know you and you live nearby, so I can totally get this money from you. So, yeah, fine, you can take this." So that promise that that person made to pay you after 2 days is accounts receivable. These are very common sales and extremely common records in a business. Notes receivable were promissory notes which were actually written, whereas accounts receivable are promises, oral promises. Alright, they are less secure than notes receivable, but both the things are extremely common in businesses. Next is prepaid expenses. Businesses often pay their expenses in advance. So how are you going to record those expenses? You will record those expenses with prepaid expenses in your assets. These expenses haven't incurred, but you have already paid for them. Maybe it's your rent. Maybe some employee took advance from you and that's going to be written as prepaid expenses. Or maybe you have paid advance amount to your supplier. These are your prepaid expenses. And you are going to write it under prepaid expenses in your accounting books. This prepaid expenses comes under asset, because these are services, inventory, or one thing or other that haven't been used but you have already paid for them. And once you start using them, you start transferring them. It's a long process which we will learn in the upcoming videos. If you want to learn them, make sure to subscribe. Next is land. Land is an account which records land bought and utilized by a business. Whereas if you are buying a land, if your business is buying a land for sale purpose, then it will be recorded in a separate account, which is investment account. Next one is building. Buildings could be office, could be warehouse, could be garage, and any other such buildings which are used by a business are recorded in buildings account. However, just like land, if you are buying some buildings for selling them later on, then they will be added in a separate account, which will be investment account. Next is inventory. Inventory is a term for merchandise or raw materials that a company has on hand. And if it's raw material, you are either going to make finished goods with it, or you can even sell the raw materials. Same goes with the merchandise, the finished products. You are going to sell them and you will get some revenue from it. Now, this is why the inventory is added in the assets account. Here we are done with the major assets accounts. Now we are going towards liabilities account. Liabilities mean how much you owe someone. Liability accounts are categories within the business books that show how much it owes. Alright? So now we are going to study some of the categories that come under liabilities. First one is notes payable. Alright? The account note payable is a liability account in which a borrower's written promise to pay a lender is recorded. Now we read something about notes receivable. Do you remember that? Yes, written promise. Now over here, business is giving their written promise to someone else that, hey, we will pay you later. You can take this note against it. Alright? Same is the situation with accounts payable. They are opposite of accounts receivable, and this is the payment that company has to make for certain purchases made on account. On account means that a promise is made, we will pay later. If you remember from accounting equation, we have done almost all of these entries and the video will be linked in the description box. And I told you exactly what account payable and account receivables are. Next one is accrued liabilities. Accrued liability is an expense that a business has incurred but has not yet paid. We studied prepaid expenses. Over there, expenses haven't incurred, but you have already paid the people. Alright? However, in this situation, business got all these expenses, but you have not paid. Usually, salaries payable is a perfect example for these liabilities. In most businesses, in most cases, salaries are paid after employee has given his services. So those are your accrued liabilities. Next is owner's equity. Okay, this is our third category and you can see the video is ending soon. I really hope you guys are enjoying it and understanding it. If you are, give this video a thumbs up. Come on guys. Alright, so owner's equity is defined as the proportion of the total value of a company's assets that can be claimed by its owners. What is owned by owners? We are going to see that under owner's equity. Alright, there are a few things over here. First one is capital. Capital account shows the claim of the owners to the assets of the business. Capital is what an owner has invested in a business. Alright, whatever amount they can claim to. That's capital. Withdrawals. Alright, remember when we did a drawing transaction in the accounting equation video? Alright, so there are some times when owner takes money out of the business for his personal use. That money is recorded under withdrawal account. They have their own separate accounts and every transaction, every drawing is recorded in this account. Next is revenues. Alright, so what are revenues? Revenues is what a business earns from selling goods or services. These are recorded in a separate account under owner's equity and these are called revenues. And they are added to the owner's equity. Next one is expenses. As we studied in accounting equation video, the revenue and expenses will be paid or gained by the owner. Alright, so expenses. Expenses incurred by a business are recorded in the expense accounts under the owner's equity. I really hope you guys understood the whole video. Do get the notes, they have exercises as well, and it will help you in understanding these terms more. That's it for this video. If you liked it, make sure to give this video a thumbs up, do subscribe and share, and I will see you guys in my next video. Bye guys!